Hi guys, we'll quickly go through a market outlook for 2023. I'll basically let you know what to look out for. There's four main things, so let's just start with the first one, and that is earnings week. So next week and the following week, until the middle of February, companies will be reporting their earnings. What this basically means is they will be reporting their sales and profits for the last quarter. So last quarter was October, November, December. For those 3 months, they will be reporting their how they performed basically. If they have performed better, meaning their profits are good, then markets will most likely rally. If it hasn't, those stocks will basically fall. But something much more important than that will be released, and that is the market outlook. So, what is market outlook? Or what was the exact word? Forward guidance. They will be releasing forward guidance, which is also a market outlook kind of. But what's included in forward guidance is they will explain what the companies, what these big tech companies, which are very important, what they are expecting going into 2023. So they will talk about whether it's going to be a recession or what they're going to do, whether they're going to increase unemployment, I think they're going to start firing people, or they're going to start investing more and gain more profits. So all of that will be included in the forward guidance. And if the forward guidance is good, then that will be a very good sign for the markets and it will start picking up. And the second thing is a global recession. Oh, before we head on to that, if you just go into trading view and then there is a separate earnings calendar, you can see when the companies are reporting earnings. So next week it's mainly going to be banks, JP Morgan, Wells Fargo, all of those major banks which are very important. And the following week it's mainly going to be tech companies and so on. So a few companies that you have to look out for is Apple, Amazon, all of the very important tech companies. If you pay attention to their forward guidance, that will help you a lot and basically help you navigate the markets in 2023. The second thing is a recession. So there have been many talks about a recession coming up in 2023, this year. So, if you just Google global recession, you can see multiple media companies reporting on this. It's not a good thing that basically the news is trying to create fear in the market. So when fear happens, people sell their stuff. I mean, there's a lot of people selling, the supply increases, and asset prices fall. It's very simple. But um, so there's multiple talks about a global recession. One of the main good article that I saw was this from, I'm not too sure it was that, but there was one from BBC, I think. Yeah, this one. I mean, they're just blaming everyone and everything for a recession. Anyway, uh, but what you have to pay close attention to is people talking about the recession. Now, one very good thing is within this earnings season, which is the first thing we talked about, the forward guidance, companies will literally tell you what they are forecasting. So they will tell you whether they think they're going into recession or whether we are not going into recession. They'll tell you whether they're firing people or not, or whether they're hiring people, which is good. So they will literally tell you what they are doing. All you have to do is pay attention to them, and you will literally know whether we will be entering into a recession or not. If you're not, then that's perfect. More money to be made out here. And the third and fourth thing, it's combined. Inflation and the Fed. Now, this is literally the elephant in the room. So the main reason markets have been selling off last year is due to inflation and the Federal Reserve, which is the Fed, increasing interest rates. Or and even in Australia, the Commonwealth Bank of Australia, is that the central bank? I'm not too sure, but the Central Bank of Australia, whatever the name is, I literally forgot. Um, but they have been increasing rates as well. So all the banks, major countries around the world, have been increasing their interest rates. And as you know, when interest rates goes up, everything becomes expensive, and markets usually fall because growth slows down. So throughout 2022, this has been happening, which is why we have been selling off. But the good news is we are into 2023, and since now the headline thing is US inflation. Now that is literally what's driving markets all around the world. Crypto, stocks, houses, it's mainly influenced by United States, even though we're living in a whole different country. But as you can see here, since June last year, where inflation was at 9.1%, I mean they say it's 9.1, pretty sure it was higher than that, but no time for conspiracies. It has been 9. It has been falling ever since, which is good, which is a good sign because the Federal Reserve, they want their inflation rate to be at 2%, 2 to 3%. So they want it to be somewhere around here. So from all the way from up here, which is 6.5%, they have to come all the way down to somewhere around this range. And what happens when this happens? When they want inflation to go down? So when inflation goes down, it comes at a cost. What is that cost? One thing is mainly unemployment. As we can see here, this is the unemployment rate chart. Currently, we are at 3.7% in US. They want it to go up to like 5%, so somewhere around here, which is actually very high. So in order for inflation to go down, when inflation goes down, unemployment usually rises, because what the Federal Reserve is doing is it's a simple process. So I'll explain it a bit more clearer. Inflation goes up. To fight that, in order to bring inflation down, the Federal Reserve, they increase their interest rates. They want spending to stop. They want everything to become a bit more expensive so that we stop spending. When we stop spending, inflation falls. So the Fed will start increasing their interest rates. When the interest rates are increased, more companies will start literally letting people go. They will start firing people, and basically it's not a good thing, but that solves inflation. That's basically what the Federal Reserve is trying to do. They're trying to increase unemployment. So the good thing about all of this is the Federal Reserve, who has been increasing the interest rates throughout 2022, has now slowed increasing the interest rates down. So basically, I've mentioned this before, they were doing interest rate hike of like 0.75% in 1 month. So they were literally raising interest rates by like almost by 1% every single 1 month, which is very, very high and very, very fast, which is not good for economies. The good thing is now they have slowed it down. So before they were increasing the inflation, oh sorry, the interest rate, the Fed rates by like 0.75%, whereas now they are only increasing it by 0.25 or 0.5%. And somewhere around March, they are expected to stop increasing rates overall. So they're gonna stop increasing rates, which is actually a good thing. It's a bullish thing, but that doesn't mean markets are going to rally again, because the only time markets will rally is when the Fed pivots. So what is Fed pivoting exactly? The Fed pivot means now they have raised this interest rate up to somewhere around 5.5%. That will be their target rate. So they reached somewhere around 5.5% in March. They will hold it there, and they will start decreasing. So some 5.5%, they'll say we're decreasing the interest rate by 1%. That is a Fed pivot, because they are decreasing the interest rate. Decreasing interest rate means Fed pivot. So in order to decrease the interest rate, what the government or what the Fed wants is for inflation to reach their targets of like 2 to 3%. That's what they want. They want inflation to fall, and only when it's within that 2% 3% range, that's only when they will start pivoting and increase and decreasing interest rates again. So that's when you can expect the markets to completely rally, and that's when a lot of money, a lot of safe money can be made. But that should be it. So that's the four main things. One, I will just recap. One is the earnings outlook. So if you go here, you can see all the earnings. What's more important than the earnings is the forward guidance. So if they tell us that they won't be hiring people, or they will be firing people, that's a bad sign. If they aren't doing that, then that's a good sign. The second thing is a global recession. You can just look out for news articles or any interesting developments and know what's coming up. The best way to know for sure is to combine what the tech companies are saying, what the big massive banks and tech companies are saying, with the central banks or the UN or whatever it is, or the global bank, whatever they are saying, then you'll know for sure whether they're going to whether there's going to be a recession or not. And the second thing is that was the second thing. The third thing and the fourth thing combined is inflation and the Fed rate. So, as we know, inflation has peaked in June 2022. It was at 9.1%. It has been falling ever since then, and currently we are at 6.5%, which is actually good. But what they are aiming is at 2 to 3%. So we still have to decrease it by almost 4%, which is actually a very hard task to do. And in order to decrease the inflation rate, when the Fed pivots, or sorry, when the Fed increases interest rates or the Fed rates, what usually happens is unemployment rises, and unemployment rising is not a good thing for markets because people have less money, less spending, and the market will literally go into a recession. So they want unemployment rate to go up to 5 to 5.5%, which is actually high. And yeah, that's about it. So four main things to keep in mind. One of the best ways that you can keep up with everything is Yahoo Finance. So my YouTube is a bit weird, but if I show you, if I go to youtube.com, I have this Chrome extension called Unhook. It's good because it doesn't show you dumb shit. It just shows you what you have subscribed to only, and like good content. So mine's usually about money. It's all about money or something about self improvement. But it's called Unhook. I'm not promoting. I don't get any money out of this. But if you go to Yahoo Finance, go on to videos. You don't have to watch all of this. Most of this is literally bullshit. It's irrelevant information for us. But if you look at some of the headlines, just read the headlines, then you will see all of these major CEOs of like banks, of companies, they will come and tell you what they are expecting. Pay close attention to that, and that's how you can keep up with the market. So Yahoo Finance is actually a very good tool, very underrated, because the people who come here to talk are millionaires, billionaires, people like CEOs of major companies, and every important person under the sun which you can learn from. So pay attention to that, and I will leave it there. Subscribe, like, and yeah, show some support. Have a good one, guys. See ya. Bye.